Market sentiment remains bearish on the US dollar as investors expect the US Federal Reserve to end its rate hike cycle. Investors are confident that the Fed will reconsider its plan to raise interest rates twice this year, making a rate hike only at the end of the July meeting, which will be held next week. Yesterday's report on slowing inflation was followed by a report on retail sales in the United States. The growth rate was much lower than expected, and this sparked another wave of speculation and launched a sell-off in the US dollar. Let's find out what events may affect the market this week. You are watching the InstaForex TV channel. On Thursday, at the opening of the Asian Pacific trading session, investors will assess the Reserve Bank of Australia's monetary policy prospects on the data characterizing the state of the Australian labour market. The previous report looked at strong growth of 75,000, while it was assumed that the growth of only 15,000. In anticipation of the data for June, analysts again forecast an increase of 15,000. How the market will react to this data can be judged by the reaction to the previous publication. Investors sold the Australian dollar, assuming that such strong figures may deter the central bank to raise the interest rate. We expect a similar market reaction on Thursday morning. Investors will also pay close attention to the US jobs report, which will provide information on the change in unemployment claims. The report shows that there are more unemployed. This will cause investors to sell the US dollar as those who have lost their jobs lose their income and spend less money. Less demand contributes to lower consumer prices, thus the Fed may consider to refrain from rate hikes. Therefore, the US dollar may continue to decline amid softer rhetoric from the US regulator. On a Friday, investors will see how well the Bank of Japan is curbing inflation. Although the central bank is just watching inflation slow down on its own, the regulator has kept its interest rates at minus 0.10%, supporting the national economy, while inflation has decreased to 3.2%. Analysts have been pessimistic about this strategy, forecasting a rebound in inflation to 3.5%. But last month they expected an increase to 4.1%, but the forecast did not come true, and we will see how the situation will unfold on Friday. UK data also shows the need to support business and consumer demand. The Bank of England is pursuing a fairly aggressive policy. At its last meeting, the regulator raised its interest rate by 50 basis points. In this environment, inflation has finally started to decelerate, but it's still at a very high level compared to other developed countries. Currently, it stands at 7.9% on a yearly basis. With such high prices, consumption is subdued. On a Friday, the retail sales report is likely to once again confirm sluggish demand. In addition, the crippling UK economy may trigger a sell-off in the British pound. On a Friday, Canada will report on retail sales as well. Growth is also slowing down. However, it still posts green figures. Analysts expect a 0.5% gain, indicating that the Bank of Canada is unlikely to continue its rate hike cycle. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon!